This is Ken Boyd with St. Louis Test Preparation, and this is another one of our intermediate accounting videos. This is Intermediate 8A, a continuation of trading securities. Here's our Facebook page, St. Louis Test Prep, the website, and the book Cost Accounting for Dummies that I teach in a live chat about once a week. What we've already done is gone through available for sale and changing to a trading security, and then hold to maturity changing to an available for sale. So I'm going to continue on with examples of trading securities between security types. This is changing the designation of a security from AFS to hold to maturity, available for sale to hold to maturity. So the rule is that available for sale securities are held at fair value, reported at fair value, and that the unrealized gains and losses are posted to OCI, which is other comprehensive income. So we've gone through this same example on video 8A, and I'll continue it. 1.1.13, we buy a security for cash. We buy an investment in AFS. It's an asset account, an investing account, and we pay cash, credit cash. 12/31/13, the fair value has increased by $10 from 10 to 20. So we increase the fair value debit. We have an unrealized gain, AFS security credit. A year later, the fair value of the security declines by $5. We have an unrealized loss of 5, a fair value credit of 5. Then we get to March 3rd, and we have to do two things. The first thing I always suggest is let's adjust the fair market value of the AFS security before we talk about moving the security and changing the type. So, in this case, the fair market of the security is increased by 10 from 15 where it was back up to 25. We increase the fair value account debit. We have an unrealized gain AFS credit. So now the security is brought up to date and the accounting is updated to March 3rd. Now we're going to move the security from an available for sale to a held to maturity security. So we create a new asset, investment and held to maturity at $25, which is the current fair market value. We remove the investment and available for sale security by crediting and recredit it for its cost. Going forward, we don't need the fair value adjustment for available for sale anymore, so we are going to debit that account by $15. Debits now equal credits, and the fair market value adjustment account is removed. Going forward, it's a hold to maturity security. So going forward, there's no fair market value adjustment for the security going forward. So if on 12/31/15 the value of the security was 32, the fair market value doesn't cause a change. There is no journal entry because it's now an available for sale security, and we don't adjust for increases and decreases in the fair market value. One more thing that's left hanging is, well, what about that unrealized holding gain and loss that we had on the AFS security that accumulated over time? The way we deal with it is that gain or loss is amortized over the life of the security. Because it's a hold to maturity security, it has to be a bond. A bond has a maturity date. Because we ended with a credit balance in unrealized holding gain, we are going to debit to reduce that gain and credit to somehow put it into income, probably amortization of bond income over time. And that time period would be from the time that we make the change in the security to the maturity date of the bond, because remember that hold to maturity securities can only be bonds. So if there's 5 years left, we would amortize over 5 years. One last thing I wanted to point out here is that an easy way to keep track of what's going on in these accounts is to set up a T account. So I had a $15 debit balance in the fair value adjustment account. We credited it to remove it when we switched to hold to maturity. And further, this is the unrealized holding gain loss account. I knew I had a $15 credit for a gain as of March 3rd. So over time, we're going to